Hey everybody, Jason here with the Landlord Launch. In today's video, we are going to discuss, I'm going to start getting into some bookkeeping items, and I want to get into the most basic ways that you can kind of track your income and expenses. And I think this is a good idea in general, even if it's not for income expense tracking. It's a very useful thing to have because it allows you to keep your personal and your business affairs separated, and that is a dedicated checking account for your your rents, your rental receipts, your expenses, and then I also like to have a security deposit account as well. And some states actually require you to have a separate security deposit account. So just to kind of get into this briefly, this shouldn't be a very long video, but think about all the ins and outs, income and expenses you have for your rental property over the course of a year. Even if it's just one property, over the course of a year, taking all those receipts and keeping track of everything and putting them in a shoebox and all that, that could get to be kind of a pain. And then when it comes time to do your taxes, then you have to organize everything. You have to sort everything out. Or if you decide to be someone who just takes that shoebox to your accountant, then they're going to charge you to sort all that out. So what I like to do is, at minimum, and I think this is the first step, even if you go further with bookkeeping and accounting and so forth and keeping track of your income and expenses in more advanced ways, which I do recommend, but if you just need to do the bare minimum necessity, open up a dedicated checking account. And I always like to name it something like such and such properties rental receipts or rental receipts account. That way I can tell very easily when I go on my online banking which is my personal account and which is my rental receipts account. So only business income, only business expenses go into this account. And that means your rents, any type of late fees, anything the tenant pays, things along those lines. And those would be all your income items. And then your expenses, use that as a checking account. Maybe if you use a credit card to pay for your expenses, that's fine as well. But again, I would do a dedicated credit card. But if not, you can use a debit card for that account as well for that, or you can just write checks. And so what that does is that, of course, we get monthly statements for our checking account, and it has a list of all income and all expenses. At minimum, what you can do is you can print off or download that monthly bank statement and go through, and if it's not clear, just write notes right on a statement. What is it for? Is it for materials? Is it for utilities? Is it for such and such? And then what you have when it comes time for taxes is 12, if we got the whole year in, 12 bank statements with all the income and all the expenses and the classifications of those expenses. And that is going to be a lot easier for that accountant to deal with. Or you can go a step further and you can summarize those as well and say, okay, over the course of the year I had this much expense in repairs, this much expense in utilities, this much expense in turnover costs, whatever it may be. This is how much income I had. And then if you need to draw from that account, in terms of putting money into your own pocket, then you can also document that as well as an owner draw. You can have your mortgage taken out of this. You can have your taxes taken out of this, your insurance taken out of this. If those are all automatic, it kind of depends how you set all that up. A lot of us have mortgage, taxes, insurance in one payment that can come directly out of that account. I like to set mine up automatically so I don't have to worry about that writing that check every month. Of course, make sure you have the money in there to do that. But in my opinion, that is the easiest, most basic way to keep track of your income and expenses. And for most of us, with especially just like one house, that's a really easy way to do it. When you start getting into multiple properties, it becomes a little more problematic in that not only do you have to track the income and expenses, but then you have to track for which property it is for as well, and that becomes a little more of a challenge. The other, again, if you do decide to use a credit card for expenses, that's perfectly fine too. I highly recommend, same deal. Make sure that it is a dedicated credit card. You're not putting personal expenses on there because that muddies the water. And if you are an LLC, this is also important as well, because that's one of the things that we can do to show the separation between our personal and our investment stuff, and that means no commingling or any of that along those lines too. And then, like I said before, in some states you may even be required to, but if not, I still recommend it, is getting the security deposit, putting it in a separate account. If it's interest bearing, a lot of times you have to pay that interest out to the tenant. Not all states know your laws, but if you do, some states say don't even, okay, so some states may require you to use a separate security deposit account, but may say that it doesn't have to be interest bearing. A lot of times though, if it is interest bearing, they will say that that interest needs to go to the tenant. So just know what that is for your state before you set all that up. So that's it. That's a short and sweet video. Again, just a real basic way to keep track of your income and expenses. I hope it's been helpful. If you have any questions, jump in the group and let us know, of course. And that's it. That's what I have for today. So we'll wrap it up. Thank you for watching, and we will see you next time.